G'day folks, welcome back to another update. Today we're looking at Bitcoin. Now we did anticipate a divergence on our last update and that has actually occurred. So the retrace has started. Before we go to the charts, make sure you hit that like and subscribe button to support the channel. And first look at the outlook. So as of today, December 22, Bitcoin has surpassed $100,000 mark driven by increased institutional investment and the approval of Bitcoin exchange traded funds, ETFs, in the US. Notably, MicroStrategy's substantial Bitcoin holdings have led to its inclusion in the Nasdaq 100. Additionally, President-elect Donald Trump's pro-crypto stance has bolstered market confidence. However, recent hawkish signals from the Federal Reserve introduced short-term volatility, causing Bitcoin to retreat from its peak. So as always, we start with the long-term trends. And we look at the monthly, the weekly, and the daily. And for those new to the channel, we've got these moving averages on the price and also the CCI 150. And that can be found in the description below if you want to learn how to paint those on your charting software. So first off, on the monthly, the price is very bullish, obviously, as we've been expecting, and it's actually reached new highs, as I said, above 100,000. The CCI is also reaching new peaks as well, above its respective moving averages. Now, that's a bullish signal. Now on the weekly, it's actually broken down into that moving average, giving us a somewhat neutral positioning. So what we look at is when the CCI breaks above the moving averages, it's a bullish momentum. When it's below the moving averages, that's bearish. And when it's within that moving average range, like it was back here, that's actually neutral. So that's how we look at trading, and we trade on the charts in accordance with the higher time frame. So if you're trading on the weekly, for example, we trade in the direction of the monthly. Or if you're trading on the daily, we trade in the direction of the weekly, and so on. So on the daily, we did say the weekly is broken into the neutral positioning. So if you're trading on the daily, just hold off. We do have this bearish divergence at the moment on the daily after hitting this key resistance up here at 108.263. And we did have here, you can see there lower highs on the CCI versus higher highs on the price. And that CCI is still dropping. And you can see there, we're not sure how far, and that's already started to break to the downside, and that was that 23.38% target level. And what we do is we look at the high to a recent significant low before that divergence started. We measure that as a 23.38% minimum retrace. And I use that as a minimum because more than 90% of the time it does hit this range, and then it does one of three things. It either bounces out of that, or it breaks right through, or it might consolidate in that range for a while. So at the moment, it's actually hit that range and bounced, but notice the CCI is still falling. And for this to keep rising, we want to see the CCI break higher than that moving average. And likewise, I'd like to see this break higher than that recent high as well to be bullish. But at the moment, it's showing bearish momentum, so avoid going long. If anything, I'd like to see this break lower and go short. And if this breaks below this 38% level, then we look at the next resistance or support level at this 50% level at 80.206. Now, if we go to the intraday chart, so if you're trading on the intraday, like the one, I've got the 1 hour here as an example, but you can interchange this with any of your intraday trades, intraday trading time frames. So again, we go short only. So for example, back here when the prices break into the downside on the daily, we wait for it to break to the downside on the 1 hour as well. So you can see back here, that was up until that point, you'll notice the prices kept rising. So we could have taken some little short trades during this period here. If I zoom right out, there were some short-term trading opportunities in these little dips here. So we only take short trades. We don't go long in accordance with the higher time frame. So yes, that would have been profitable if you got into that one. But again, you're sort of trading against the major trend. So again, always go with the higher time frame trade. So the more recent one would have been back here, broke down, and I like to take the exit of the close of the trade when the CCI breaks into that moving average range. So you would have made a little gain in that little point there. Re-enter it again when it broke below. That could have been a stop loss or a very break-even loss. Or if you want to hold on to it, depending on where your stop loss was, and then break it out again and go close it out at the candle there near the bottom when the CCI breaks into that moving average range. Avoid going short or long until it breaks down again. And you would have gone short on that candle, and again close it out when it broke into that moving average range on the CCI. And another little trade would have been taken there, and that would have been probably a very small gain or a small loss, depending on where you got in on that little candle there. Avoid going long or short at the moment. The price and the CCI is breaking up, although it looks like it's leveling out a bit at the moment. So just wait for it to possibly break further to the downside on both the price and the CCI to go short. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.